Joining us right now to break down the market and commodity action at our trading block is Jim Uro. He is director at TJM Institutional Services. He's also a CNBC contributor. And Chris Faulkner, who is the CEO, president, and chairman of Breitling Energy. Chris, I want to start with you this morning because It's not just oil prices we've been watching with such fascination, but also natural gas prices. Yesterday, their biggest one-day gain in 9 months. What happened?
Well, we think that natural gas obviously is responding to winter coming on finally. In the Northeast really is what impacts natural gas prices. The cold winter.
People are surprised that winter's here?
Well, I think it was a little slow coming. In Texas, we had a pretty cold spring, but it doesn't really impact gas prices. As the Northeast gets prediction of heavy winter, gas moves up. Still, though, range-bound, natural gas prices will remain below $5, we think, going through the end of this decade. So I wouldn't see the supply and demand fundamentals have been fixed, but at least we get cold winters and hot summers is what's moving the needle, and that's about it.
You don't think it's simply supply and demand for the oil price moves that we've seen, is it?
No, I think we've got two concerns on oil prices. Number one, Libyan production came back on, even if that's temporary. Now the Kurds have got to deal with Baghdad. They can export oil in the coming months, we think, out of the northern routes of Iraq. That might put in more oil into the market. The Iranian nuclear deal happening on the 24th, if that gets sort of resolved, those sanctions could come down a bit, putting more oil into the market. Or if they don't, we could see extended sanctions in Iran causing oil to come out of the market, causing supply hopefully to come down. Prices go up. The biggest thing we have right now is Saudi and the OPEC meeting on Thanksgiving. We've got now Russia and Venezuela kind of tag teaming this roadshow, trying to convince OPEC to cut production. Saudi's still saying they're not going to cut production. If that happens, we might see oil prices slide even further down and test $70.
So, Chris, has OPEC lost control? Is this about U.S. production, kind of trumping all else?
Look, I think OPEC is becoming less and less relevant. There's a lot of infighting between these countries. They're held together literally by duct tape, OPEC is now. So I think all eyes are on Saudi and what they're going to do. But I think now they're focused on market share versus price control. So I think Saudi wants to beat their chest and say, look, we are the swing producer of the world. The United States is now producing 9 million barrels. They still produce 9.6, but we're on their heels. They can drive the price down. They can weather a storm at $80 or 75. They can withdraw money from that foreign currency exchange fund they've got, $750 billion in cash on hand. So they think they can drive the price down, create the market share demand for themselves, and say, look, we're still in control of this thing. How long that will last, how long OPEC will be around, I don't know. But the United States, I think, will have to make a decision. If oil prices go below 70, are we going to lay rigs down, or are we going to curb production temporarily and leave oil in the ground? I think smaller producers are going to be making those decisions rapidly, quickly, if things don't change here.
Hey, Jim, let's talk about the markets, because we did see the S&P set another record yesterday, but it's almost a begrudging record. It seems like investors are a little nervous at these levels.
Well, and they should be. We've traded kind of in a sideways range for about a week. I do think we're going to make new highs. Remember when we used to debate about whether domestic data points, whether good news equals bad news or good news equals good news? And I think that argument has changed a little bit. Now, good news equals good news here, but what we really like to see is bad news in Japan and Europe, because what's going to happen then is that assures that they keep the pedal to the metal as far as liquidity goes, and that money ends up here. Because at the end of the day, you have to look and say, what are you going to buy? You see an Italian 10-year trading at 2.2-ish, French at 1.1. Our stuff here looks great by comparison.
Yeah, our stuff here looks great by comparison, but what else concerns you? I mean, obviously there's a lot of unease out there.
If we start to see the weakness in those economies starting to drag us down considerably, but then even then we'll see, we could possibly see an acceleration of accommodation here, and that should support asset prices. The thing that bothers me the most, I guess, is just when people get on one side of the boat. Like that euro trade is very crowded at the short side. If people start buying euros back, it could be a little bit destabilizing, and people get worried. They sell risk. That worries me a little bit, but not even that much.
Jim, let me ask you real quickly about Japan. How should we read that? Is that good news because obviously more stimulus is going to come? Is it bad news because without the constant stimulus, they can't stand on their own 2 feet?
Well, it's good news in the short term. Long term, it's awful. The only way they could possibly get out of their problem is to devalue the yen, and they're beginning to know that, too. There's even some conspiracy theorists that I surround myself with yesterday who were saying that number may have been massaged to the downside just so Abe gets ground cover to suspend the sales tax and increase liquidity. That's fine, because that money's going to end up here soon. Like you said, it all comes down to the world's tallest midget, and that's us. And that's actually a bad characterization, by the way, because our economy is going pretty well. But I do think it's good news when we get bad news out of Japan.
Jim, Chris, thank you both.
Thank you.